The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 13th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's truly what it's all about. Hope everybody out there had a great evening. Let's go take a look at one of our tools. This is the tool I call an attitude of gratitude. Question: do you awaken each morning full of appreciation for the life that you live every day? Or do you have to think long and hard before finding something to be grateful for? I love the emails that I receive from listeners each day. I'm grateful for them. Oftentimes, yesterday included, a listener asked me, how do I find that passion? How do I find that passion that you have in your life? How do I find the direction? How do I find strong reasons why? You've heard me talk about strong reasons why. The answer, folks, it lies within gratitude. You see, the real question is, what in my life am I grateful for? Or better yet, what is it that is in my life right now that I am taking for granted? Think about it. Focus on everything in your life that you've taken for granted. Write down one or two things right now. You know, oftentimes, if you think about it, the belief that stops you and I, the belief that stops us from taking action is the attempt to attain the standard of perfection. You know, it most certainly is true when it comes to trading. And as you know, perfection is the lowest standard on the face of the earth. Reason being, perfection just simply doesn't exist. What exists? Outstanding. That exists. Being extraordinary. That exists. And if your standard is to be extraordinary, is to be outstanding, then all you need to do is what? Just like David said in that opening, you've got to take massive action. Take massive action towards your outcome, whatever that outcome might be. You know, I take for granted the ability to nearly instantly take a look at a blank chart and interpret what I believe the bulls and the bears are communicating. I take that for granted, yet I could not be more grateful for that ability and the opportunity to do that on a continuous basis for several hours, not just several hours here between 9 and 11, but really all hours of the day. Yes, when I wake each morning, I'm eager. I'm fully appreciative of the life that I have today. Do I want more? Yes, absolutely. Will I get everything right? Absolutely not. But will I attain a level of being outstanding? I can guarantee you I absolutely will. You know, there's so many things in each of our lives right now that were not there last year. How about 2 years ago, 3 years ago, and so on? These are the things that you and I, that we take for granted. Start with that list. Start with a list of everything in your life right now that you take for granted and turn that into your gratitude list. Put that inside your cellular phone, on your memo pad, on your computer system. You see, gratitude touches the ultimate foundation of our existence. There's hardly another quality within each of us that is so suited to truly reveal the state of our capacity. You know, no one can be grateful to himself or to herself. Instead, gratitude goes from one person to another. That's why when I start my show, and I do mean it, it's sincere. I am grateful for your presence here today. I'm grateful for that every single day. Yes, gratitude goes from one person to another. It's just that simple. And here's the cool thing. When we are grateful, fear disappears and abundance appears out there. Yes, folks, an attitude of gratitude. I promise you that it will work for you. Let's go see who's grateful in the markets here. Looks like the bulls right now this morning. We've got Dow futures up 32 points. They're trading out at 16,371. S&P futures up 4 1/4. They're trading at 1872. NASDAQ futures up about 12 points at 37.18. King dollar back at 20 cents right now, 200 pips. We're going to take a look at the euro because that is the culprit. That's the primary culprit behind the move out here. You've got the gold is back $2, silver back 15 cents right now, light sweet crude down 11 cents. A quick peek around the globe. Let's see what we have going on over in Germany right now. The DAX is up 22 points right now. 0.25%. FTSE is off 11 points. Mixed bag in Asia last night. Flat market in the Nikkei. It was down 14 points. Hang Seng, not so flat. It was down a little flat tire. It was off 145 points, about 0.7% out there. Now, the Shanghai, that was up 1 full percentage point. All that needed was 22 points to the upside. Our call-in number is 877-927-6648. Give me a call. Be happy to field your question, help you out however I can. Let's go take a look at the euro. Let's go take a look at the euro-U.S. dollar currency pair out here. Let's type that in. Let's see if we can start with a blank chart. So if you're listening on your mobile device at TFNN.mobi, thanks so much for doing that. Remember, you can always catch the live stream of the show by going to the homepage of TFNN.com. Go to the upper right-hand side. You'll see 3 little smartphone-type buttons, devices. Click on that. The show will stream live for you. And you'll actually see, I'm going to take a blank, naked chart. So I said I take for granted, I should say, the ability to take a clean chart and figure out what the bulls and the bears are doing out here. So let's go take a look at doing that same thing. So it's a daily chart that we've got of the euro-U.S. dollar. Now, number of things out here. One of the first things we can see is that, we made a significant low, or it made a significant low back here, July 23rd, 2012, out at the level of 1.2066. You can see what, in essence, looks like a rising price channel, right? So let's go ahead. I'm going to use my little parallel tool out here. Makes it easy to go ahead. I'm going to leave it like this, I think. Make it easy to go ahead and draw the rising price channel that price is traveling in. So we're going to use the body of the candle. I'm going to do the best I can to grab the body of the candle. There we go. And we're just going to try to find the largest number of co-located opens and closes. I would have to say it's probably right around there. See, I could have taken the bottom here, which would have taken me down around the July 11 time frame. But we can find more co-located opens and closes if we come up just a bit higher. So this little area down here looks like if we put up the relative strength, relative weakness indicator out there, we're probably going to find that was moving into an extreme oversold condition. I don't know that to be the case right now, but we'll go check that out. So here, this is what appears to me to be the rising price channel, the lower portion of it. Again, we're using either the open or close. We're using the body of the candle out there. So it's right around there. We don't need to be perfect because it doesn't exist. We just need to be what? Outstanding, extraordinary. So this is where I'm going to go ahead and mark the top of the rising price channel right around this level here. So you can see a nice little, every time that the euro-U.S. dollar has come down and touched the bottom of this line, it has acted as a support area. So that's the first pattern that we see. Let's just try to figure out where the euro-U.S. dollar is in relationship to this little peak out here. This peak here that stands out at me, this is where we see a real significant change in trend. This is taking place back in May of 2011. So let's go measure from a Fibonacci standpoint from that level, that price being 1.49389, all the way down to that bottom that I had mentioned on July 24th. Let's go ahead and we'll darken that in a bit. So at 138.31, you can see that was the 0.618 retracement. Why is that so important? Well, because this level here, the euro has now moved above that area. When you move above one floor, just like an elevator, that's how you can use these Fibonacci numbers. When you move above one floor, you can go to the next floor. What's the next floor? Well, the next floor that you and I use is 0.786. That says 143.18 out here. So right now, the message of the euro-U.S. dollar currency pair is saying that that's where it wants to travel to. Now, so there's 2 tools that we have used out here. Let's take a look at how about that? How has the trend? Let's actually use English language out here. Has the trend changed? How would you take a look at trend? Well, you could come all the way back to that same swing point that we're using, that we're anchoring for our Fibonacci numbers, and we'll just simply use a trend line versus a channel line. So in a trend line, I'm going to use the extreme emotions of the candle. That means I'm going to use, this case here, I'm using the tops of the wicks out here. You could use this as the trend line, the next touch point being August 29th, and you can say, yeah, that trend has broken for sure. You could try to even come a little bit lower. That trend is broken, meaning the high of October 27th out there. So the trend is broken no matter what you would choose from a swing point, even if you came all the way back out here to February 1st of 2013. So I'm just going to go ahead. This one seems to me to be the more logical trend. So you've seen that change in trend take place Clearly inside of the euro U.S. dollar. Now, let's go take a look at A to B equals CD patterns, because the market often moves in that lightning bolt pattern. And the one that sticks out to me, I don't know if it sticks out to you, is coming all the way back down to that low that was put in here on July 24th. If you just visually look at the chart out here, we would go from that low, and that, what is that, about a $1.20 level out here. I'm not worried about hitting the exact number. So we're going to go from that low, and I'm going to use this swing point high out here on February 1st. And that was out at 1.37098. The retracement takes us down into lows here. Looks like right around the July 9th area. Now, what markets typically do is a 1-to-1 A to B equals CD. The 1-to-1 A to B equals CD pattern inside of the euro U.S. dollar on a daily chart takes you up to 1.4424, just slightly above that 0.786 retracement. So at this stage here, what the euro U.S. dollar is doing, number one, let's go ahead and, number one, it's in a rising price channel, so that's clear to us. Number two, we can see an A to B equals CD pattern that's out there. Now, in the case of the euro, in the case of currency pairs, you don't have volume out there, so there's no way, if you were a master of the art of timing the trade, if you were taking a look at the volume patterns that confirm A to B equals CD patterns, you don't have that inside of the currency pair. So instead, you've got to take a look at other things, candle formations, maybe other things that are going on a shorter term basis here. Well, if you take a look at this set of swing points, how about bearish reversal signals, because old resistance becomes new support out there? And if we take a look at this, what we can say is if I were to switch over to a weekly chart, what we do know is coming all the way back to these highs here, back in 2008. In fact, we can do it here on the daily chart. If we come back to that swing point, that takes you up to the 159 level. What we can see here for sure is that the euro U.S. dollar has broken that. We'll have to do that when we get back from the break here. There's the trend, but we'll change the color of that line out there. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not really much of a change here in the futures market. Dow futures up 40 points right now. So let's go back to this chart here. This is the Euro-US dollar currency pair chart. We're looking at the daily chart out here, daily time frame. And when we went to break, I was trying to draw the trend line. I've got it in my chart right now. Remember, you catch the archive of this show on Channel 9. And I've drawn that as a black diagonal descending line out here. I've gone ahead and thickened it up. And we're using this as a trend line versus a channel line out here. The trend, again, taking advantage of the extreme emotion of the candle, the upper, in this case here, the wick, the shadow, whatever you want to refer to it as. In this case, it's really the high. July 14, 2008, 1.59681 is the number. The next high that I'm using out here looks like May the 2nd, May 1st, May 2nd, sometime right around there, 1.49, pretty much 149 even Steven. Now, what we can see here, as I go ahead and I blow this up on my screen here, you can see that that trend was broken with a wide-ranging bar, which is important because there was certainly some horizontal resistance. The last real bearish candle that you see out here on the chart, that took place back in October of 2013. And now when I'm referring to the highs up here at the high level out here, there was no bearish reversal signal during this little spike up on December 27th. We did have a little bearish engulfing candle as well back here on December the 12th. And look, these are the sign builders. These are the bulls and bears in the marketplace. So real resistance being the top of that little doji candle out here. I'll use that as a red line going across my screen. So that wide-ranging bar took out the trend. Remember, it has a trend line that's been established going all the way back to 2008 time frame, and he took it out with a wide-ranging bar. Not you, but the currency pair took it out with a wide-ranging bar. So it took out both diagonal and horizontal support out there, and that says, hey, this break could really be real out here. If you take a look at even a smaller A to B equals CD to the upside, let's see what it's doing on a shorter-term time frame out here. On a daily chart, I'd use that swing point from November 7th. That's out at about 1.3294, all the way up to the top of that resistance, that trend line that acted as a resistance line on December 27th. Then we'll pull all the way back to the lows that were established here February 3rd. Remember, the Euro-US dollar, you may not remember this, but I've done tests and studies that go back over years and years and years and take a look at how the Euro-US dollar currency pair makes a significant top or bottom in the first 2 months of the year, between the end of December and the early part of February out here. Well, this low may have come in on February 3rd. We've broken a trend. Now, the 1-to-1 A to B equals CD on that pattern says 1.4074, so it's got a ways to go before it gets up and completes that 1-to-1 A to B equals CD. At this stage, that looks like that is at a minimum what it needs to do. Why is this all important? Well, in the currency world, the currency pairs, that's really what's driving the stock market out here. People can call it QE, whatever, to infinity. It's really all about liquidity. And the liquidity, the carry trade, it's our friend, your friend, and mine, and that is the Euro-Japanese yen. But it's good to understand what's going on with the Euro-U.S. dollar currency pair as well. So that looks like it wants higher price. Now, let's put up the last tool, not the last tool, but another tool that we'll put on the screen here, because let's take a look at what's going on with price as it's moving up here. Let's put up our relative strength indicator. Now, what we can see here, and this is the 14 period, is as prices moved higher today, what it's done is getting towards that overbought condition. It could go a bit higher. It's reading about 69.77. You get in that 70-plus range out there. You start getting into an overbought area. That's when a market just simply, to work off that condition, moves sideways or pulls back. And as long as price is able to stay above this trend line, I would have to say support now is going to be, should be, the high of the October 25th candle out there, right around 1.3831. That's the first level of support. And then just below it is going to be that trend line out there, as long as the euro is able to stay outside of this. And the importance of this relative strength indicator, the 14 period, you can see each time up here, we've seen a market, and the last time that it was up here was back in December 2011. The market went ahead and moved sideways, pulled back a little bit before it went up and tried to catch that trend. It was also up here as it was making highs back in October of 2013. So that's really what's going on with the euro. Now, that's going to make it a little bit easier for you to be able to follow the other charts that we take a look at. Let's take a look at silver here. If we take a look at high-ho silver right now, silver has been really struggling to break its trend line, to break its channel lines out here. As I pull this back, the red diagonal line that you see on my screen here, that happens to be the descending price channel for silver. This takes us all the way back to its highs back in April of 2011. This is an important trend line. This is an important channel line, which is really what it is. And take a look at how it's acted as resistance. Whereas in the case of Goldilocks has been over the trend line, and silver has not been able to break that. I don't know. Is that saying something more about our economy versus the precious metal? I don't know. But I do know that's an important battleground for high-ho silver. 877-927-6648. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 41 points, trading out of 16,379. S&P up 4, trade at 1872 and change. Composite up 14 points, trading out at 43.37. Russell 2000 leading the charge. The upside up 4 points, trading out at 11.95. Apple up back about 31 cents. Microsoft up 7. Google up 72 pennies, leading the charge to the upside. Amazing Amazon. We're going to see if this thing's got any juice in it. It's up $7 and a change out there. Amazon has been a weak link in the marketplace. A VIP Shop Holdings up $10 this morning, up 7%. Magic Jack, CALL, call is the ticker symbol. Man, that's up 25%. What the heck is going on with Magic Jack? They generated revenues of $38 million versus 41 from the prior year, so they're certainly not knocking it out of the park when it comes to their top line. Do they have some kind of buyout or something going on out here? Their net income their net income doubled, but you doubling your net income on less revenue. That's always suspect. At least it's suspect in my world out there, being a bean counter. Nonetheless, it is up 22% out here, and I don't see a buyout or anything like that. In any event, we'll take a look at Magic Jack. Williams in Sonoma, WSM, is the ticker symbol. Now that's up 8%. That must be because everybody's buying all that great chocolate souffle. Hey, do you like chocolate souffles? Do you like dessert out there? Well, if you're like me, the answer is yes. And one of my favorite desserts happens to be a chocolate souffle. I got turned on to chocolate souffles, many, many, many years ago in traveling over to Hawaii to Roy's. If you've never been to a Roy's, it's a pretty good restaurant. Better over in Hawaii than the ones that I've been to here in the States. Anyways, their chocolate souffles are to die for. But if you really want chocolate souffles, just go over to Williams in Sonoma. I think you can. I know you can buy this over the internet, and they've got this. They've got this little already pre-mixed batter thing, and you put it in the freezer, and you take a little scoop out. You know those little ice cream scoops. You put it in one of those souffle dishes. You throw it in the oven. About 20 minutes or so, and you have one of the most incredible desserts. In any event, Williams in Sonoma, it's traveling to the upside. And looks like this souffle is rising. Not a souffle that is falling out here. I don't see here's the numbers. Net earnings, $138 million versus $133, so about the same. Revenues, $1.47 billion versus $1.41. We've got, let's see, what else do we have moving here to the upside? 3D Systems up a couple of percent. Scientific Games, SG, MS is the ticker symbol. It's up 17%, up $2.40. To the downside, Methode Electronics is what I'm guessing it is. MEI is the ticker symbol. That's off 14% this morning, down $5. Net sales of how about this? Their net sales were up 54%. They were $189.8 million versus 123. What did they do on the net income side here? That was for their third quarter. Net income was $14.6 million, 38 cents a share versus $3 million. Man, these guys hit it out of the park. They must be saying their world is coming to an end because their stock is just getting hammered out here. Now, Jazz Pharmaceuticals, JAZZ, the Jazzy one, it's down $3 and change, off a couple of percent. PVH Corp, PVH is a ticker symbol. It's off 2%. Home Inns and Hotels, HMIN, is a ticker symbol. They're out with their fourth quarter numbers out here. Looks like net income about 12. This is RMB, so this is a Chinese stock out here. 12.9 versus 6.3 million. In any event, it's getting hammered. Herbalife out there down 3.5% this morning, down a couple of bucks out there. Go Inc. is going to the wrong direction here. It's going to the downside. It's off 8%. Again, our call number 877-927-6648. Quick check back on the currencies out here. We got that euro, Japanese yen, and, we had the Bears show up here on, let's say it's Thursday, so on Tuesday. Yesterday was just a draw in the currency pair, and today you can see that the bulls are really trying. Now, that's why we took a look at the euro. We can take a look at the U.S. dollar, Japanese yen out here, but the Japanese yen, obviously the denominator in this. The euro is the numerator when we take a look at this currency pair, and what the bears are looking for and what the bulls are looking for is what happens at that price level of 143.78 out there. If, in fact, that gets taken out, and I mean taken out not by like a pip or something like that. I truly mean taken out. Then what that sets up is not just a move to the upside, meaning the December 27 swing point high, which is at 1.4567, but quite frankly, that'll be enough fuel that should take this market off to a new constellation, because this currency pair should then turn into a butterfly. Whether that's 1.272 or 1.618, we'll just simply have to take it. But right now, you still have the bears in control of this currency pair out there, and that says, hey, be careful. Now, that's what's going on inside that currency pair. Let's go check out what's going on in some of these stocks here that are popping and dropping. Let's go check in on Amazon. That is still leading the charge, up $9 out here. So let's go see what kind of volume. Of course, it's too early into the trading session to really see that, but we do have a gap up this morning, and it is back now inside of the gap here. That has been a resistance area. Of course, the trading session is not over. The gap I'm referring to was the gap down 16 million shares. Let's draw a line across the screen out here. That's the high of January 31st, which is at a price point of 375.45. Again, 16 million shares to the downside. Only been trading for 10 minutes out here, but it is gapped up. We've done 860,000 shares thus far. It is going to take out a B point of an A to B equals CD to the upside in Amazon, assuming that it closes above the price level of 375.33 out here. That happens to be the swing point from March 6th. So, couple things going on. We know we're up at a resistance level, what we'll call resistance number 1, because resistance number 2 would be in essence the bottom of the gap. The bottom of the gap, because this was a gap down, the bottom being the higher candle out there, meaning the January 30th session, or the price point of 387.80. Now, let's take a look at this potential A to B equals CD to the upside. And Amazon has not participated at all in the market rally that we've had out here. That says that Amazon would at a minimum head up to the swing point high, because the 1-to-1 takes you to 401.32, and the swing point out there, the bottom of the swing point high, which happens to be January 22nd, is 402. So it would head up there. If it's moving in, boy, there's no volume up at that swing point. That's January 22nd. I don't know if that was a holiday or what was going on out there, but there was no volume, and that was 2 million shares, so it should have no problem as it approaches that area. So that's on Amazon. The next area of resistance, though, could be the bottom of the gap, or the top, however you want to take a look at it, meaning the January 30th low. 387.70. Right now it's trading out at 379.65, so looks like it'll get up there post-haste. Let's take a look at VIP Shop. I know we looked at that yesterday, VIPS. I think this one, I just can't recall what this stock was doing. Let me see here. It's on one of my tabs, show up, show down. One of the shows, VIPS. It should be right in front of me. Okay, let's take it right over here to... see if it's here. There we go. Yeah, so this thing here had gapped up, boy, with some real nice volume out here. Does that on the trading session of March the 4th. Let me go ahead and pull this out. And it was pulling back, even yesterday pulling back, but on light volume. Thought that this thing might come all the way back to test the and fill the gap, which would be the February 28th high out there at 132.88, because then that might be setting up a heck of a nice buy. In this case here this morning, it said, the heck with all you guys. I'm ready to take off. It is gapped up. Not created an island or anything, I don't believe. Let's see here. Is there a little island? The low of March 10th, 165 even Steven, and the high of this was 155.97. What do we got as a low here this morning? 156.80. Yeah, this thing even has a little bit of a gap in it here this morning. A small little island right here. Pretty powerful looking stock. Now it has sold off from its intra-session high out here. We'll come back and take a look at this candle formation tomorrow. See how, in fact, it trades. But let's go take a look at some of these other stocks here. As long as I'm in my show down area here, let's go take a look at Methode Electronics. I'm guessing MEI is the ticker symbol. It's just because it's abbreviated on my screen. Let me see what they actually do out here. Looks like I'm getting a little bit of a delayed feed on this. Make sure it's still trading. Yeah, it's still trading. They engage in the design, manufacture, and marketing of components and subsystem devices worldwide. Boy, that told you a lot, didn't it? It's an automotive segment. What do? They provide electronic, mechanical devices related to automobile. So maybe these guys are involved with the GM recall out there. That would have to be my guess. In any event, let's go see what's going on inside this stock chart out here. MEI is the ticker symbol. Gapping down, has got good volume behind it. Now, this thing had a nice sign of strength here recently, which was on December the 5th. This thing moves up with 4.5 million shares out here. Unfortunately, it's coming back to fill a gap in a breakout area with volume. So it had 4.5 million shares on the breakout. This morning here, though, it is down with already 677,000 shares. It appears that it is getting ready to not just take out a B point, which would be the February 5th low, but let's see, is this a three-gap play by any chance? It is not, because this was the second gap out here was larger than the third gap. Nonetheless, this thing is pulling back. We'll see if this thing can find support somewhere in the 35-ish type area. 35-ish, let me take that back. Around the 27-ish type area. It's trading right now at $30.09. Let's take a look at Jazz Pharmaceuticals. JAZZ is the ticker symbol. It's trading down a couple of percentage points. It's trading off $3.36. Doesn't look like a real big deal out here, though, for Jazz Pharmaceuticals. Still a, let's see here. Yeah, this thing had been pretty bullish out here. It had its first sign of institutional selling. If we take a look at this, let me get rid of the A to B equals CD out here. So Jazz Pharmaceuticals on the trading session of February 26th, down with 3.5 million shares. If I pull this back, we're going to see that that's one of the larger volume days out here. It's the largest volume day going back to June 28, 2013, and that is volume off of the top inside of Jazz Pharmaceuticals out here. So that is not a good scene for a stock chart that has looked pretty stellar. There was some additional selling that took place here on January 27th. That was also to the downside. So looks like Jazz Pharmaceuticals may be trying to come all the way back to a breakout area eventually from December 23rd out here. December 20th, I should say, when it gapped up with a couple million shares out there. So Jazz Pharmaceuticals showing some institutional selling with inside of it. Let's take a look at Let's take a look at Herbalife. Let's go see what's going on inside of this stock here. The fight between a bull and a bear for sure. And let's go see who's winning the battle here today. So Herbalife down with big volume yesterday. A lot of volatility clearly in this stock here. Carl Icahn does not look like he's winning this battle here just yet. I believe he is the largest individual shareholder out here. So looks like he may be taking, of course, who knows what the trade actually looks like at this stage as he drove things higher. Nonetheless, Herbalife here may be setting up an A to B equals CD to the downside. And all it needs to do in order to accomplish that is get below, close below 59.09. You're trading at 58.38. The volume there, 8.9 million shares. Yesterday, it was down with 15 million shares out there. So the A to B equals CD to the downside. Carl, are you listening here? Looks like that could take you to a price point. Oh, I just grabbed the wrong swing point out here. If we take a look at that, the A to B equals CD to the downside, that would take Herbalife down to a price point of about 46.77 out here. What do we have at 46.77? Not a lot to support it. Not a lot to support it. Where Herbalife, what Herbalife has got high volume low. That's not been tested all the way back at $24 out here. So from a technical standpoint, it doesn't. Let's put this on a weekly chart out here. Let's go see. Let's take a look at this thing from a technical standpoint. Yeah, take a look at that high volume bar all the way back in December 21st, 2012 out here. So on a weekly chart, this thing is taking out an A to B equals CD. That's even more important, right? So that low of 59.09 is important. There's 29 million shares there, but you've already done 21 million shares, so it should be able to exceed that volume. So on a weekly basis, that says lower price for sure. And I would imagine, yeah, it's even below this. This thing is looking at somewhere around the $45 type area. Trading right now at 58.58. If we take a look at let's take a look at Tesla. TSLA is the ticker symbol. Did this thing gap down here this morning? TSLA. Because if it did, no, it did not. Okay, so no island reversal yet, at least inside this equity. This one we want to be paying attention to. Why? Because it's a nice couple $100 sexy stock out here. And this thing creates the island, and all it needs to do, it can't do it today, but tomorrow a gap down somehow below 228.45 out there would create a nice big island reversal. Not one that you want to get stranded on, but right now it's okay. Let's take a look here at some things moving to the upside here. We got Magic Jack. CALL is the ticker symbol, and let's see what Magic Jack is doing, up 22%. Oh, man, this looks pretty good. Let's pull this thing back. Let's see if it's taking out some all-time highs out here. No, it is not. But we'll go take a look at Magic Jack, maybe forming an A to B equals CD to the upside when we get back from this breakout here. Dow's up 55. S&P is up 4. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 38 points. S&P is up 3 points right now, but it's Magic Jack that is truly up in the market here. 1.9 million shares as we speak right now, taking out a swing point that came in on February 21st. That only had 928,000 shares. So you've got a confirmed A to B equals CD pattern on the upside. We had this had a nice sign of strength in it back here on February the 10th. Gaps up with a couple million shares. So today's sign of strength even stronger than that sign of strength out there. So let's go see where that A to B equals CD pattern takes us to. And then let's go take a look at a little longer-term time frame chart out here for Magic Jack. So the 1-to-1 says 2608. I would have to say more likely in taking a look at this, what Magic Jack wants to do is get all the way back to its swing point highs out here, which will take you back into the March 20th, 2012 time frame, right around a $27 area. $26.97 is that number out there inside of Magic Jack on the daily charts. Let me put this on a weekly here for a moment, see if we can find any damage out here. And look at that volume for the week here of February 14th. Nice, big, wide price spread as was moving into a swing point. So moving into that swing point from May the 10th on a weekly basis, that had 3.2 million shares, and you were moving into it with 7.5 million shares out there. So that was saying, the bulls were ready to take that level out. So it looks like Magic Jack is headed back to its highs out here. It'll test the resistance zone, all-time highs of March 23rd, 2012. Again, it's a weekly chart, as well as September 7th, 2012 out there. So looking pretty good there. Let's go check out Williams and Sonoma. Let's go cook a chocolate souffle here this morning. That's not a good thing. That's making me hungry. WSM, and I don't have anyone to cook me a chocolate souffle as we speak. But let's go take a look at it. Trade down at 63.70. It's got some nice volume behind its move out here. That's confirming an A to B equals CD to the upside. Very nice looking. Let's get rid of, it's a little bit overbought, but nonetheless, pretty darn nice looking stock chart, at least what I'm looking at here right now. Not too shabby. The B point of the A to B equals CD on this happens to be the March 10th swing point. That had 907,000 shares. You've already done today 1.7 million. So that's a nice big gold confirmed A to B equals CD to the upside. This thing also breaking through a consolidation out here. Let's put this on a little bit longer time frame. Let's put this on a weekly out here. Yeah, so the weekly, I guess we already took a look at this before. Yeah, Williams and Sonoma on the weekly chart confirmed an A to B equals CD. So that's the pattern that is underway here. And that was from March 22nd, 2013. It crossed its B point then. It had 17 million shares the week of March 22nd. It crossed the B point from May 13th, 2011. That only had 6.5 million shares. This has a projection on the weekly of 69.07. So that's 69.07 on the weekly. On the daily time frame out here, your A to B equals CD. Not much of a retracement. I kind of dislike these, but the that A to B equals CD says 65.96, and the 1 to 1.272 at a minimum. That's what I would expect. The 68.09 area, 1 to 1.618 says $70. So yeah, that's 69.07 on the weekly. That looks like a pretty much a sure thing, as it's a chocolate souffle for Williams and Sonoma. It looks like it will be rising out there. Let's go take a look at, we haven't looked at the commodities here. Let me try to, well, I can't do that. I'll have to wrap that up in the next trading, in the next hour out there. But I can go take a look at light sweet crude for you. Right now we've got light sweet crude. It is trading out at 97.89. Now light sweet crude here completed a 1-to-1 A to B equals CD down. It did that yesterday at about 2:30 in the afternoon. It's just hanging out here. Let's this is a 120-minute chart that's on my screen. Let's see. Was this working off an over? Oh yeah. All it was doing is working off an oversold condition. Working sideways. Looks like we have lower price still left inside of light sweet crude. Folks, have a terrific Thursday. Thanks so much for joining me. Look forward to seeing you soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.